Hey everybody, it's Shannon from alphatrends.net. Today is Friday, the 6th of November 2020, and we have our election kind of out of the way, I guess. And it was a great week for stocks. Really, I've been doing this long enough to know not to be surprised by anything, but the magnitude of this rally this week certainly took me by surprise. So let's take a look at the charts and make some sense of it. The S&P 500, rather, last week I had pointed out on Twitter that I thought we would maybe undercut this low just briefly before we made a rally attempt, but instead we nailed that volume weighted average price from the May low, and that's something I had pointed out beforehand as a level of interest. I didn't buy there. It was certainly a level to keep an eye on, and then with the election uncertainty, I was pointing to this little inverted head and shoulders pattern, which is typical of the way a market does end up turning anyways, pattern of lower highs and lower lows switches to a higher low and then a higher high. Well, on Tuesday rather, the market took off really nicely here. And as I had pointed out on Twitter, let me just pull that up because it's kind of interesting to see here that this is something I've been talking about for quite a while, is when you see a market like the S&P 500, and on the chart here on the left, here's a 5-day moving average that I always talk about. Well, when the market gaps up above a declining 5-day moving average, what often happens is it gaps up that day, pulls back below the VWAP, and then continues, as I said, for several days. And here's the chart that I had pointed out. So here was that 15-minute chart with the 5-day moving average, and then the market gapped up, got back above the volume weighted average price, and of course, here we are now, much higher several days later. So you have to learn to listen to the message of the market and be able to adapt to what it's giving you. Now, I'm not saying I went in all in over here, but we had some great trends on Alpha Trends this week. Best one was probably SOLO because we got involved at 280, I think it was, and still holding a third of that one. But the point is, the markets are behaving very well. Where have they come from? Well, they've just had big rallies this week. As we saw, we're up, 7%, 9% in some of these markets. And now where do they have the potential to go before there's likely supply? Well, this prior peak over here in the NASDAQ maybe is going to slow it down. So it's certainly a level of interest. But when we look at a shorter term time frame, 15-minute time frame here or the 30-minute time frame, you can see there is absolutely zero evidence that the market is finding significant resistance there. Going into next week, I'd like to see this market slow down a little bit and perhaps let some stocks set up a little bit better. But as long as we're above the rising 5-day moving average, I'm certainly not going to fight the momentum. And same is true in the S&P 500. We just came from 323 to 325. Where has it come from? It's expended a lot of energy, has the potential to find resistance here, but I'm not calling it resistance until the market actually backs away from there. Let's talk about if it does back away from there. Well, then we might be able to come down towards 340-ish, or perhaps the volume weighted average price from the low, which is basically in that area. So that would be our first main level of interest to see if the buyers do in fact maintain that and defend that level. The Russell 2000, for those people who trade, who buy when the market gaps lower, expecting all gaps get filled. Well, here you are now, 9 months later, and you're about to see that gap in the Russell 2000 get filled. Buying for gap fills is a fool's strategy. Buy with momentum when the market is in your favor. Because if you bought here, then what happened? Did you ride it all the way down? The point is, the buyers are in control of the Russell 2000. It's been a frustrating, choppy market, so I haven't been focused on this one. I'm going to continue not to focus on it because it's just been too choppy and gappy and difficult to trade. The semiconductors are up at a new all-time high, and as we know, the semiconductors lead the NASDAQ. This is telling me that despite the fact we might be at a level of interest that could be resistance, the semiconductors are saying, look for continued upside here. There is no sign of the market topping out. Biotechs pulled back a little bit. This is a good thing after that big day on Wednesday. This is exactly what I wanted to happen, in fact. We fell short of the rising 200-day moving average. We had a big day on Wednesday, and now you can see We're down to the week-to-date volume-weighted average price here today and that 5-day moving average. I think you want to keep an eye on these biotechs next week. Now, the pattern is right now on the short-term time frame, lower highs and lower lows. So I want to wait for evidence that it turns sideways, maybe over the next day or two, and then break some resistance, and then look for it to get moving higher. So I think the biotechs are on the verge of possibly making another run for all-time highs here. And of course, the financials are just the perpetual dogs. They still have a declining 200-day moving average. They're stuck in this big range. Why waste your time with stuff that's not moving?